Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through our live mortgage rates. Then we're going to be talking about 1099 loans. So great topic here for today. Give us just a moment here to go live on all the different platforms. Got the chat up on the screen there. Feel free to drop a comment there in the chat as you tune in. Hope everybody had a great holiday weekend and is ready to get back to it. Interested to see what the rates look like today now that the week is opening back up. Now, it looks like we're live on all the platforms, so we'll go ahead and get it started. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. You can also drop any questions you have in the chat as well, and we'll make sure to answer them after we get through the presentation. All right, so welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our live mortgage rates, and then we do a deep dive into a different loan type. And today's loan type is going to be 1099 loans. So great topic here for today. But before we do that, we'll go over our live rates. So Nick, if you're ready, let's go ahead and pull up the rates and see what they're looking like today.
All right. So not much change since last week, which is sometimes good here. Definitely the lowest it's been in over a year. So we'll check out the rates for today. It is September 3rd, just after 11 a.m. Eastern. So all our initial sheets after the long weekend are live here for the standard programs. We'll set up a basic scenario to compare the APR across the programs. If you'd like a full breakdown and itemized loan estimate that breaks down all the fees, please get with one of our team members. We have over 300 loan officers to help you out. For the demo, as we do every morning, we'll set up a basic scenario, standard single-family home. We'll set up a $500,000 purchase price, $400,000 loan amount. That corresponds to 80% loan, 20% down payment. And we'll use an estimated 760 credit score and an estimated 40% debt to income ratio. So with those settings, let's check the rates for today. So first option, typically the most common option people think of when they think of a mortgage, are 30-year fixed conventional loan for a primary home. Rates as low as 5.99 this morning. Final APR 6.277, about the same as it was last week, lowest in a year. Amazing. And if our customer doesn't qualify for a standard conventional for any reason, we'll typically want to quote an FHA option as well. FHA allows more leniency on credit issues, as well as a much higher overall debt to income ratio, but does require upfront and yearly mortgage insurance. FHA comes in today at 5.125 rate. Final APR 6.064. So if our customer qualifies for both, the APR could be a touch cheaper on FHA, but they would need to be willing to do that mortgage insurance. Now, moving on to our VA option. So VA is only for eligible active service members and veterans. If you are eligible, these programs are amazing. Rates as low as 5.25 today. And final APR with the standard funding fee here, 5.542. So notice if our customer qualifies for VA, that's going to be superior to FHA and conventional when we compare the APRs across the programs. And our final standard option here is USDA. That's only for properties in USDA eligible areas of the country. If the property is eligible and the borrower is eligible, these are great options. USDA comes in today, 5.125 rate. Final APR 5.867 with standard fees there. So when our customer is comparing that to an FHA, if the property is eligible, it's a great option because it's a little cheaper. And it's definitely a little cheaper than conventional as well. So if the property is eligible, definitely a good option. And that rounds out the standard options that any bank or lender has. But if our customer doesn't qualify with any of those, many banks or lenders would have to deny them. That's where we love to go into our 5,000 other options, starting with our non-QM alt doc for a primary home. So if our customer doesn't qualify for conventional with 2 years of tax returns, standard documents, needs to use alternative docs such as bank statements, 1099s, our topic for today, P&L statements, all kinds of different options. Rates today come in at 6.49, final APR of 6.825. So notice we're within almost exactly a half a point here as usual to switch to alternative docs and get that customer still qualified. So great option here for our customers that need it within a half a point of conventional. And when we move into our investment properties, tons of flexibility as well. Our non-QM alt docs, so again, bank statement or similar, for an investment property comes in today 6.875, final APR 7.300. And we'll compare that to the other investment options. Remember, there are no government options for investment properties, so no VA, USDA, or FHA, but we do have conventional rates as low as 6.75 today, final APR 7.095. So a touch cheaper than our alt doc, which is typical, but not cheaper than our favorite loans, our DSCR loans. It stands for debt service coverage ratio. No income needed, no employment needed. Simply use the estimated rents from the appraisal to determine a DSCR ratio. If the estimated rents can exceed the estimated expenses, that is a ratio of 1 or higher, which is preferred, aka the property will cash flow monthly. For all these demos, we use a ratio of 1.5 so we can see all the programs. And first up is our 3-year prepayment penalty option. Rates as low as 6.5, final APR 6.810, so beats conventional, absolutely amazing. And we can throw a 5-year prepayment penalty on there, usually lowers the rates a touch. This morning, not quite, same rate, 6.5, but lower cost, APR 6.747. So again, beating conventional. No prepayment penalty is an option for some states that don't allow it. Rates as low as 6.999, final APR 7.429. So notice that's a touch higher than conventional to use a DSCR with no prepayment penalty, but still most investors would choose a DSCR loan. And if you can add a prepayment penalty, it makes it even better. And the final two options here are second mortgages. So these are not HELOCs, which is typically the option most people think of when they're looking for a second mortgage. They don't want to touch that first mortgage. Now we have our 30-year fixed second mortgage options for a primary home to get that cash out, not have to use a HELOC. Rates as low as 8.375, final APR 8.786. And these are non-QM programs, so we can use bank statements as similar. And same program for investment properties. HELOCs are very rare for investment properties as well. So this is definitely a great option. Rates as low as 9.75, final APR 9.995 to get that cash out of an investment property with a second mortgage. And let's go ahead and switch to today's topic. Again, 1099 loans are a category of our alt doc. Typically, the bank statement option is the one that you see on the live pricers. So fortunately, today we have Jose to break down how the 1099 option works exactly and pull up some more live pricing for that. So you ready, Jose?
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. 1099, very interesting subset of our self-employed borrower loans. This is the one that allows for the highest percentage of income from the income stream to be used. Similar to bank statement for self-employed borrowers, right? Except bank statement loans only go up to a maximum 80% of the deposits of the applicable business deposits, whereas the 1099 is always going to use 90% of the amount stated on the 1099 documents. Now, do please be aware that as this is a non-QM loan, all guidelines are different, so all the requirements are different. Some 1099 options require the borrower to only be receiving 1099s from one employer, quote unquote, because they're not really their employer. I guess they are contracting them. Whereas other 1099 options allow multiple 1099s. So please do review the guidelines to make sure that you pick the correct one. This is a great program for example, real estate agents, right? All real estate agents receive a 1099. So it would be much better to qualify them under the 1099 option rather than the bank statement option. Let's go ahead and share our purchase and refinance options for you today that I have for you today. First option is at the maximum LTV of 90%, as with all non-QM loans, never any mortgage insurance applicable at any loan to value. So this one here for our primary purchase, lowest cost option, 8.5% at a cost of 0.75 points. Then you can buy that down to 7.625 at a cost of 2.5 points for our primary 1099 purchase. Now for our primary 1099 purchase with a 600 credit score, Our lowest cost option is 10.999 at par, and you can buy that down to 9.875. And our investment option at the maximum LTV of 85%, 15% down, you're looking at 8.499 lowest cost option at par, and you can buy that down to 6.999 at a cost of 3.5 points. And our 1099 investment option with a 600 credit score, which is the lowest credit score, by the way, that we have available for this option. 10.999 is our lowest cost option at par, and you can buy that down to 9.375 at a cost of 3.375 points. And for our cash out options, first we have our 1099 primary cash out. 80% LTV is the maximum for this one. A little bit lower LTV than the bank statement option, because the bank statement option does have a little bit more liquidity in secondary, hence they go up to 85% LTV on a cash out primary. But here we're looking at 7.875 lowest cost option at a cost of 0.25, and you can buy that down all the way to 6.75 at a cost of 2.5 points for our primary cash out option. Our investment cash out option, also 80% LTV, lowest cost option 7.999, which is par, and 6.874 lowest rate option at a cost of 3.125. And you do see a little bit better rate on this one. Well, actually, no, a little bit better than the investment, but the 5-year prepaid definitely helps pricing on that one. And our last option here, our cash out option, in this case for primary. However, this same option is available for investment as well, both at 75% LTV with a 600 credit score. And you're looking at 11.25 is our lowest cost option at a quarter point. And you can buy that down all the way to 10.25 at a cost of 2.375 points for this 1099 primary cash out refi with our lowest possible credit score of 600. So definitely some amazing options here to purchase or refinance with a 1099. And do remember that on these 1099 options, we will always use 90% of the stated income on the 1099.
Absolutely. That's amazing. All right. I don't see any questions, so we can go ahead and wrap it up then. And remember that we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different loan type. It does look like we have a question that just came in here. Let's see here. Question is it good for a nail shop owner to use 1099s with only 1 year of tax records?
Yes, it is. If they receive 1099s, then by all means, the option that I have provided today were all with 1 year's worth of 1099s. Typically, 2 years of self-employment is required. However, there are exceptions for that if the borrower is transitioning, doing the same job duties, job description, job type as a W-2 employee and now transitioned on the same duties to be self-employed. We could probably get them approved with only 1 year of self-employment. But there has to be that tie-in to the previous job that they were doing, similar to the new self-employment.
All right. Thank you for the question. All right, we'll go ahead and wrap it up then. So we will be back here tomorrow with a new topic. We appreciate everybody tuning in, and we will see you tomorrow, 11 a.m. Eastern, for the next